G'day guys. Hey look, one of the questions that we've been asked as part of our video series is what happens with your mortgage when you move house. Now this is probably quite interesting in the context of perhaps break fees, or that you've got a really good rate and rates have since gone up and you really want to keep that rate. So look, one of the things a lot of people don't realise is that when you move house, you can move your mortgage with the house. It's called loan portability. So if you've got a really good rate and you want to keep it, or you've gone to repay your loans and there's a big break fee and you'd rather not pay that, then loan portability is a way that we can move the mortgage. Generally speaking, what it relies on is that you're buying and selling on the same day. In which case it's not even a credit decision by the bank unless you need to borrow more money. If you're borrowing the same amount of money, we can just simply move the mortgage from one property to the other. If you need to borrow more money, we'll obviously have to top the mortgage up, but you can still move your existing fixed rates from one property to the next. But hey, what happens if there's say a week or 2 or 3 days between settlement? We can still use loan portability in that situation as well. What happens is your solicitor gets the funds back from the sale of your property, and then we can leave that with the solicitor or pass that money back to the bank, and they'll put it on term deposit, and then when you settle on the new property they'll put the loans back in place. So again, same sort of thing. Or it could be the other way around, where you buy first and settle, in which case we can settle with a temporary floating rate loan and effectively bridge it, and then transfer over your existing loans to the new property. So there's 2 or 3 different ways we can transfer loans from one property to the next to protect your rates. Talk to you next time. Cheers.